All right, welcome back to Vegas Unwrapped. Aaron Phillips, Ricky Cash, Bobcat on the board. Jim Epley from JD's Tax Service here in the house with us in the business spotlight in the hot seat, Mr. Cash.
We certainly know that, and we've talked about it even during the break, about the intimidation factor of the IRS. But once you get the IRS completed and you're done with them, then there's also another very, very strong reason to see Jim and take a utilization of his services. And that's all about financial planning. I've reached a point in my life where when I look back and I say, well, what could have I done different? Well, there are obviously a lot of things. But right at the top of that list would have definitely been a better financial plan. And I think, for some of our listeners out there, and including myself, but I'm talking about our younger listeners, it's never too late, and it's really important to do this because of exactly what's going on with the economy and savings and Social Security down the road. Jim, talk about a little bit about your financial planning side of the service that you provide.
Okay. Well, I'm a registered rep with Transamerica Financial Advisors.
That's the San Francisco big building with the... Yeah, okay.
Yeah, it's definitely a pyramid that sticks out. You see it used in a lot of different movies. It's very prominent in San Francisco. So what that registered rep is basically we sell mutual funds, investments, annuities, variable annuities, all kinds of different active managed accounts, life insurance. So you're right, once they solve the problem with the IRS, now it's time to start planning because eventually they'll need something to retire on. Social Security is not going to be enough, so we'll help them in that aspect of gaining some certainty and some stability, taking them, like you said, from fear up to a higher tone level where they're starting to become cause over what they're doing.
There's no question that people my age are working a lot longer than they wanted to. Many of our parents were able to retire at 60, 65 because, they had their pensions and they had their Social Security and it was enough to pay the bills. Nowadays, you can't retire on that anymore because you need something in addition to that. What's the number one source of additional income that you recommend for somebody, let's say 30 or 35, that's now wanting to start to save for his future?
Well, somebody 30, 35 is pretty young for all of us in this room. 30, 35, you're going to save in something, probably a Roth IRA. A Roth IRA will compound over the years. You don't get a tax benefit for putting in it today, but as it compounds, it's tax deferred, meaning you don't pay any tax along the way. And as long as you wait till the magical number 59 and a half, you can take all that money out of a Roth IRA completely tax-free. Say, for example, you could put $6,000 a year into a Roth IRA. If you're 35 years old, that gives you 25 years to put into there. That's $150,000 into that Roth IRA. It'll probably grow to $500,000 or better, and you can take that whole $500,000 out completely tax-free.
See, Aaron? You see what we messed up on?
That's right.
No question about
it. That's right.
What about things like, long-term care stuff? There's always talk, again, at my age, where, what happens if you have to have that type of, facility, whether it's assisted living or nursing or whatever, and those places are remarkably expensive. How does one prepare for something like that, and at what age should they start thinking about, long-term care insurance?
Well, believe it or not, it is very expensive, and the best time to start planning for long-term care is 40, 45 years old. Start putting it away now. It's an insurance product, so you start paying for it now, and your premiums are going to be a lot cheaper now, and it'll be there for you when you need it. Statistics say 1 in 2.7 is going to actually need long-term care before the age of 65, so it's less than 1 in 3 will need some sort of long-term care before the age of 65.
Scary thought for many people out there. The baby boomers are well into their senior citizen avenues now, and so many of them are they're caught by the wayside because they're still working, not by choice, but by happenstance, and they have to be doing that. It's how does one get the word out? How do you do that? I mean, I know you're doing this, of course, but in other areas, how do you spread the word about the needs that you know people have to have out there?
We try to educate all of our clients that come in the door. If you don't have a 401k at work, you've got to start some kind of IRA or a Roth IRA. Definitely important. If you're raising a family, life insurance is very important. If you're the breadwinner, you want to make sure that the family's going to be taken care of if something happens to you as the breadwinner. The long-term care, it's usually one of the last things that comes up because it's still not even cheap at 40 to 45 years old. You're going to be paying, a little bit for that, but the coverage can be very, very beneficial down the road, as you say. Long-term care facilities around town in Vegas here run from, on the cheap side, $3,500 a month. On the high end, $7,000, $8,000 a month, just to stay in a facility to get that care. So paying $100, $200, $300 a month now is well worth the possible benefit down the road.
My father-in-law went into it. The man's right on this. It's about $7,800 a month, and he stayed in a pretty good place up in Indiana. It was about $7,800 a month. That was just for him to have a place to sleep, food, and care. It gets expensive.
It's totally amazing. Quick change of thought on this. Over the years, it depends on which side you sat on. Your recommendation: whole life, term life insurance?
Very good question. Term life gives you that coverage for 10, 15, 20, 30 years. It's only there for a temporary situation. The permanent insurance is going to be there until you're 100 years old. If you don't live that long, obviously they get the benefit, but if you do live that long, you can actually cash that out. It builds a cash value for you. So it just depends on the financial situation of the client. If they don't have a lot to put into it, temporary is what they're going to be able to afford. But usually the most beneficial is going to be your permanent policies, whether it be an indexed universal life or something that's going to be permanent and has a chance to actually grow a cash value for them that they can actually use to retire on. And there can be a tax benefit for that too. You can borrow from your life insurance when you get older and not have to pay it back.
That's really a good deal if you can find it.
Free money.
Absolutely.
Right, free money is good. So, Jim, talk about some of the other products and services that you offer as part of not just the financial services and tax, but just quickly touch on some of the other avenues that you provide. I know payroll and things like that. Talk about that.
Okay. We are a one-stop shop for small businesses. Any business that's getting started, we can help them with their licensing. We can help them form their LLC. We can be their resident agent. And then once they're in business, we can handle their bookkeeping, regular bookkeeping, whether it be monthly or quarterly, or even once a year, not preferred. I always recommend if somebody's in business, you need to know where you're at. You need to look at your financial statements, which is your profit and loss or your income and expense sheet monthly, so you can judge and determine what you need to do to make it better. If it's good, make it better. If it's bad, still make it better. So we do that. We can also do the payroll for those companies when they start hiring employees. And then it comes tax season, we can do their tax returns as well. And if perchance they get in trouble with the IRS, again, we can help them in that regard as well.
I like that it's a full-service, one-stop shop organization.
Sure, you can get so many different things. I'm gonna turn the tables on you a little bit. In the 17 years that you say you've been doing this, what was the most interesting case you've ever had?
The most interesting case that I've ever had was probably that one last year. It was a long case. We were looking at the statute of limitations on that case. We had about 6 years left on the statute. I worked with that taxpayer for about 4 of those years. I was only about 2 years old when I met him. And we sat on it. We put him into certain stages of small payment plan, uncollectible status. We had him in various areas, and then he finally decided to get that monkey off his back. So we went for the offer and compromise and got it done. It was accepted. That was about 1.5 years ago now, and it was great success.
I would imagine, knowing the IRS, that a good portion of their claim to him was penalty and interest, right?
In that particular case, you're right. I mean, a lot of times when we're looking at an offer and compromise, that means settling for less than what the taxpayer owes. So whenever you're looking at an offer and compromise, it's usually been sitting out there for a little while. So it'll gain some penalty and it'll gain some interest over the years. And the penalties, they're set. I mean, your penalties, they are what they are. It's typically, if it's a late filing, it's 5% per month for the first 5 months. So you got a 25% late filing penalty after 5 months. And then from there, you just get racked up with a 0.5% per month penalty and your interest rate. So it definitely compounds when you add it all up.
And yet the IRS is willing to do that compromise and virtually throw away the penalty and interest when it comes down to it, right?
Correct. It's based really on 2 different factors. It's based on the taxpayer's equity in their assets and their disposable income. That's really what it boils down to. If they have the assets to pay it, an offer and compromise is not likely going to fly. If they have a high amount of disposable income, that means net income left over after their expenses, again, the IRS is going to want that. So if this particular person had $1 million in the bank, we wouldn't have gotten an offer through.
Not at 3,500, that's for sure.
Yeah.
Especially starting out at 948,000.
Yeah, well, my guess is that at least half of that had to be
Right.
penalty and interest.
Absolutely.
But still, nevertheless, what an accomplishment.
Absolutely. Jim, give us the contact information again for you, sir.
Well, I'm Jim Epley at JD's Tax and Financial Solutions. We're at 2300 South Jones Boulevard. We're just north of Sahara in Falcon Park. Our phone number is 702-838-1040. Our website is www.jdstax.com.
There you go.
Sounds-
JD's Tax Service.
Sounds like a plan. This was as much as I love doing these things, I've got about 40 more questions, but in all honesty, this time goes by so fast. And I'm sure that our listeners, because we do have many, not maybe live, but from the podcast, many of them will listen to this with great interest. And I'm sure you'll get some results from it. That's for sure.
Thank you.
I know one guy already. So there you go.
Thank you, Jim. We appreciate your time tonight.
Thank you guys so much. You have a great night.
Thanks.